I am Sarah. I run a beauty salon business, Radiance Private Limited, that is GST registered. Some of you may think that the documents that you need to keep to support your input tax claims are confusing. Let me now share some tips with you. This month, I ordered some facial cream from a local supplier who issued this tax invoice. I can't use this invoice to claim the input tax. Why? This tax invoice is not valid because 1. It does not show my supplier's GST registration number, my business's name and address, and the GST amount. 2. Also, the value of sales and the GST have not been converted into Singapore dollars. As this purchase is more than $1,000, inclusive of GST, we need to ask the supplier to issue a valid tax invoice that has these details. 1. The words tax invoice. 2. The supplier's name, address, and GST registration number. 3. The invoice number and issue date. 4. The customer's name and address. 5. The description of the goods and services. 6. The GST rate. 7. The total amount payable excluding GST. 8. The GST amount, and 9. The total amount payable including GST. If the local purchases are negotiated in foreign currencies, our suppliers have to convert these items on the tax invoice into Singapore dollars. 1. The total amount payable excluding GST. 2. The total GST payable, and 3. The total amount payable including GST. We can only claim input tax on the Singapore dollar equivalent of the GST incurred as stated in the supplier's invoices. This applies even if we have recorded the Singapore dollar value of the purchases in our accounts at a different exchange rate. I also bought some stationery for my office this month. We can use a simplified tax invoice to support our input tax claims for this purchase because the total amount payable, including GST, does not exceed $1,000. A simplified tax invoice does not need to show these details. 1. The words tax invoice. 2. The customer's name and address. 3. A breakdown of the prices. 4. A separate GST amount. However, the words price payable inclusive of GST must still be shown on the simplified tax invoice. I am thinking of importing some shampoo from Europe and would like to claim the import GST incurred. First, if we take up an import permit with Singapore Customs, our company's name must be stated as the importer in the import permit. We can claim the input tax based on the Singapore dollar amount shown in the import permit. Second, if we import the goods via these 3 courier or air express shipment companies, we can use the tax invoice issued by them to support our input tax claims instead of using the import permit. For more information, please refer to the IRAS website. It is time to file my quarterly GST return. Out of these expenses incurred by my business, let's find out when input tax cannot be claimed and needs to be apportioned. We cannot claim input tax on non-business activities such as 1. Private or personal activities. 2. Activities with non-business objects in philanthropic, religious, political, patriotic, or public domain. 3. Free activities provided without commercial reasons. We can only claim input tax on goods or services that are used or will be used for our business purpose and is directly attributable to taxable supplies. Let's take a look at James, who is claiming reimbursement for his phone bill. James uses his own mobile phone for business and personal calls. My company reimburses James for his mobile phone subscription, even though we cannot determine the portion of business calls that James makes. It will be wrong for my company to claim the input tax in full, as James's mobile phone is not used for only business purposes. Also, the invoice is not issued to my company. Luckily, there is an administrative concession to allow input tax claims when the supply of fringe benefits is clearly contracted in an employee's name. IRAS will allow us to claim input tax for the expenses provided that 1. The employee is reimbursed, and 2. The expenses are recognized as business expenses in the company's accounts. In this case, although my company reimburses James in full, we can only claim input tax on the business portion of the mobile phone expenses, which will be computed at 4/7 of the GST incurred. Hence, my company can only claim input tax of $5.14 on the mobile phone expenses. Another common error is businesses claiming input tax incurred to make exempt supplies. I have an investment holding company, Properties Private Limited, that makes standard rated supplies from the rental of commercial properties and exempt supplies from the bare rental of residential properties. We pay GST on the maintenance of the properties and general business expenses such as office rental and utilities. We can claim input tax on the maintenance of the commercial properties since the expense is incurred to make standard rated supplies. We cannot claim GST on the maintenance of the residential property as it is incurred to make exempt supplies. For the GST that is incurred to make both taxable and exempt supplies, we can use this formula to calculate the amount of the residual input tax that is attributable to the making of taxable supplies. The total value of taxable supplies is $10,000, while the total supplies is $14,000. Hence, the residual input tax allowable is $180. For more information, you may visit the IRAS website and refer to these e-tax guides. Are you aware that input tax incurred on certain expenses is not claimable? Regulations 26 and 27 of the GST General Regulations do not allow these expenses to be claimed as input tax. 1. Benefits provided to the family members or relatives of your staff. 2. Club subscription fees. And 3. Any transaction involving betting, sweepstakes, lotteries, fruit machines, or games of chance. The next 2 expenses are also disallowed with some exceptions. They are 1. Cost and running expenses of motor cars, excluding the costs of private hire car transportation services for your business, expenses on motor car used by a third person, and expenses on motor car used by a related party where certain conditions are fulfilled. 2. Medical expenses and medical and accident insurance premiums. However, you can claim those that are covered under the Work Injury Compensation Act or under any collective agreement within the meaning of the Industrial Relations Act. You can also claim input tax on medical expenses incurred on or after 1st October 2021 due to the nature of work or work environment subject to certain conditions. You are encouraged to visit the IRAS website for more information. My company has paid GST on our employees' medical expenses, medical and accident insurance premiums, maintenance of our delivery van, and S-plated company cars that our employees can use for business purposes. We also pay for our employees' gym and fitness class membership. Can my company claim GST on all of these expenses? Only the input tax on the maintenance of the delivery vans can be claimed. The other expenses are specifically disallowed under Regulations 26 and 27. Hence, my company cannot claim input tax on these expenses, even though they are incurred for business purposes. If the employee's medical and insurance expenses are obligatory to be incurred under the Work Injury Compensation Act or Industrial Relations Act, then my company can claim the input tax on these expenses. My company can also claim input tax on medical expenses that are incurred due to the nature of work or work environment. The expenses must be obligatory under the law, or the medical treatment must be related to COVID-19 and the employee undergoes such treatment under any advisory issued by the government or a public authority. My company also incurred GST on packages purchased from a theme park for a family day event. Each staff gets a package free of charge, but has to pay 50% of the cost of packages for their family members. Can my company claim the GST incurred? My company can claim input tax in full on the packages given free to my staff. However, the input tax incurred on the 50% subsidized packages for the staff's family members is considered family benefits and is disallowed under Regulation 26. Nevertheless, we are able to claim input tax on 50% of the packages charged to family members and will need to account for the corresponding GST as output tax accordingly. For more information, you may visit the IRAS website. Do you know that there are a few common errors that traders usually make when claiming input tax? These errors are: 1. Claiming input tax in the wrong accounting period. 2. Calculating input tax based on the total purchase value reported in the GST return. First, the input tax should be claimed in the accounting period that tallies with the date shown in the tax invoice or import permit. You can claim input tax on your purchases before your subsequent supply of goods or services. It is not necessary to match the input tax claim for your purchases with output tax charged for the subsequent supply in the same accounting period. My company wants to purchase raw materials from a GST-registered supplier. We received a quotation from them and made a deposit on 15th June. The supplier issued us a tax invoice dated 4th August upon the delivery of goods. My company claimed input tax in the period where we made payment to the supplier. Is this correct? No. Input tax should be claimed based on the date of the supplier's tax invoice or import permit, as long as all the conditions for claiming input tax are satisfied. Hence, if my company's accounting periods are ending March, June, September, and December, we can claim the input tax in the GST return for the period covering 1st July to 30th September. This is the accounting period where we obtained the tax invoice from the supplier. Second, some businesses may calculate input tax based on the total purchase value reported in the GST return. Is this correct? No, the input tax value should be derived from the GST amount reflected on your supplier's tax invoices and import permits. Though you have to include zero-rated purchases in the value of taxable purchases for GST reporting, you should not claim input tax on zero-rated purchases as there is no GST charged. For example, this company has incurred the following standard-rated and zero-rated expenses. The total purchase value is $8,700. They calculated the input tax claimable at 9% of $8,700. Is this correct? No, they should compute input tax based on the GST amount reflected on the supplier's tax invoices and import permits. The input tax figure would be $720. For more information on claiming input tax, please refer to the IRAS website.